For the last 2 months, I've sat right here and told you about how my portfolio was earning more in a single month than I used to earn from my 9 to 5. It happened 2 months in a row, and yes, it was exciting, it was validating, it even felt a little bit surreal, but I always promise to show you the full picture. And so after back-to-back months of record-breaking highs, we're back down to reality. The markets have turned, and for the first time in a while, my portfolio has actually gone down in value. As always, I'm not a financial advisor, and this is not financial advice. Investing always carries some risk. Last month, my total portfolio was sitting at a massive milestone of £81,650. As of today, that number has dropped to £80,802. That is a total drop of £848 in a single month. While this isn't a disaster, it is a stark reminder that the stock market is a two-way street. However, I haven't actually lost that money. These are all unrealised losses because I still own the exact same number of units in my funds. The market has just decided that right now, those units are worth slightly less than they were last month. This is totally normal and fine, as we all know that value on my portfolio is just a snapshot in time and not an actual loss in money. Let's break down my investment losses by account. My Vanguard Stocks and Shares ISA, which is my oldest and largest pot, has taken the biggest hit. It has dropped from £27,482 down to £27,244. That's a decrease of roughly £238. Because this account holds the US equity fund and a few other global funds, it basically tracks the global economy. When the US in particular has a wobble, this account feels it instantly. But again, I'm looking at a timeline of at least 10 years here, so a bad month in 2025 isn't a problem at all. Before we look at the losses across the rest of my investment accounts, we need to talk about another area where money leaves your account, and that is taxes. We are rapidly approaching the 31st of January, which is the deadline for filing your self-assessment tax return. This year, having started working for myself, I've realised just how crucial it is to have a good accountant in your corner. Filing a return isn't just a legal requirement, it's about making sure you are tax efficient and not paying a penny more than you actually owe. This is where the sponsor of today's video, TaxFix, comes in. You might know them by their previous name, Tax Scouts. If you have a side hustle, if you're earning dividends outside of an ISA, or if you're self-employed, you'll likely need to file. Even if you are employed but claim expenses or earn over certain thresholds, then it's in your interest to get this sorted. And TaxFix makes this incredibly simple. They match you with an accredited accountant who sorts everything for you for a fixed low fee. It takes the stress completely out of the equation. So instead of wrestling with HMRC's confusing website and worrying if you've ticked the wrong box, you can hand it off to a pro and get it done. The reviews speak for themselves, so if you want to avoid the January panic and potential fines, check out the link in the description where new customers can benefit from a discount on their first TaxFix service and get started today. Next up is my Trading 212 ISA. This is the account where I hold that big £20,000 lump sum I invested back in July into the ACWI Global ETF. Last month, this account was flying high at nearly £23,000. Today, it sits at just £22,611, which is a drop of about £339. This is actually really interesting as a mental challenge for me because I invested such a large chunk of cash all at once that watching it drop feels a bit more painful than the drip feed investing I do elsewhere. But even with this drop, it's important to zoom out. That initial £20,000 is still worth over 22k. Hence, I'm still up by over £2,000 in total since July. The profit has shrunk slightly, but the cash I put in is still safe. My tiny experimental account with Invest Engine has also dipped slightly, going down from £147 to roughly £145. It's a drop of £2, and it sounds insignificant, but the percentage drop is exactly the same as the bigger accounts. It just goes to show that whether you have £100 invested or £100,000 invested, the market treats you exactly the same way. Then we have the pension side of things. My Doddle Lifetime ISA and my 2 old workplace pensions with Nest and Legal in General have also trended downwards. Combined, these accounts have dropped from just over £31,000 last month to £30,801 today. And that's a drop of about £270 in valuation. But to be honest, of all my accounts, I worry about these the least. I literally cannot touch this money until I'm much, much older. So what the market does in December of 2025 is completely irrelevant to the value this pot will eventually be at when I eventually do retire. And away from my specific portfolio, there has been some significant news this month impacting UK savers and investors. You've probably heard me talk about the FSCS protection limit before, that safety net that protects your cash in the bank if your provider goes bust. Well, for a long time that limit has been £85,000 per person per banking licence, but as of the 1st of December, that limit has been officially increased to £120,000. This is a huge change, and it's designed to keep up with inflation and provide more stability. While this doesn't directly protect the value of investments going down like mine did this month, it does mean that for the cash portion of your emergency fund or savings, you have a much higher safety ceiling now, which in my opinion is a positive step towards more financial security in the UK. Before I wrap up, I want to share a little observation. If I had filmed this video on Monday, it's Friday now, the numbers would have looked significantly worse. I was down over £2,000 at the start of this week, but in just a few days it recovered more than half of that loss. It's a perfect example of why checking your portfolio every single day is a bad idea. If I had panicked on Monday, I would have stressed myself out for no reason, but by waiting until the end of the month to check, I see a much smaller dip. The moral of the story: zoom out, because daily fluctuations are just noise, and it's the trends over years and decades that actually matter. So how am I feeling after seeing almost £1,000 wiped off my net worth? Honestly, I'm fine, and if you look at the total profit column of my spreadsheet, even after this red month, my total lifetime profit across all accounts is still sitting at £15,811. I am still significantly up. The market goes up and it goes down. If you panic and sell when it goes down, you just sabotage your future growth. My plan remains exactly the same. Do nothing, stay invested, and let the market do its thing, because the whole point of this money is for future me. As I like to say, the stock market is the long market. Well, I kind of just made that up, but that's because it's important to have patience when investing. This isn't a get-rich-quick scheme. If you want to see exactly how I track all of these movements and keep myself sane when the numbers turn red, you can grab the exact spreadsheet I use via the link in the description. It does all the calculations for you and helps you to focus on the long-term picture rather than monthly noise. Thank you so much for watching, and I'll see you in the next one.